All right, guys, how you doing? It's Chris. Um, let's start off by setting up your watch list. Your watch list is going to be important. These are companies that you are going to be looking to invest your money in. So let's go ahead. I'll try to make this short and sweet. Let's get started. You want to search up a company. Hit the search bar. Let's go ahead and type in. There's this drink that I see everybody drinking. Let's look at Celsius. Celsius, and it gives you a breakdown here. Let's see how it's done. You want to think long term, and you always want to compare the company with another company in the same sector. So let's say this is the beverage sector. Let's look at how it does long term. Because remember, we're trying to invest long term. So let's say you bought this back in, let's say, look, during the pandemic, 2020. Let's say you bought this at $7. This company would have made you over 1,400% in 5 years. All right. Now let's look at quick ways to analyze the company. First, you look at the market cap. This looks like a small cap company, 6.59 billion. Small cap companies they're usually higher risk, but have more growth potential. So I don't want to overcomplicate things. Just think about market cap. Small market cap companies, you got higher risk with them, but you have a lot of growth potential. Another way you want to look at the dividend yield. Right now, they're not giving out any dividends. The PE ratio, price to earnings ratio, is basically for every dollar earnings, investors are willing to pay $60 per dollar earnings. So just keep that in mind when you're comparing companies. You want to look at the latest news, see what they're working on. Look at analyst ratings. Right now they're at 68% buy. And right now, research reports saying their fair value is worth $32. And right now they're priced at $28. And for the day, they are up over 3%. Now you want to look at also quarterly earnings. Let's look at the quarterly earnings. Well, this section right here gives you trading trends. So you look at hedge funds if they're investing in it, insiders. But you want to also look at quarterly earnings. And right here, as you can see, first quarter of 2024, they beat earnings. Second quarter, they beat earnings. Third quarter, they were a little low, a little under earnings. Fourth quarter, they beat earnings. And now, May 6th, they're going to be their first quarter for 2025. And on the left-hand side, you see the dollars 0.00, 0.09. That right there tells you they're already in the positive for revenues. And now you want to compare, let's say, to Coca-Cola. So let's go up. So let's add Celsius to our watch list. So you hit the little plus sign on the top. You click where you want to put it at. This is my picks down here. And now it's saved. All right, let's go back. Let's look at another company in the same sector. Let's look at Coca-Cola. Coca-Cola, let's look at last 5 years, because remember, we're investing long term. And everybody knows what Coca-Cola is. In the past 5 years, they're up 36%. So this is a steady, established company. So you already know that. And right now it's at $70. This also tells you right here at the 52-week high, it's at $73. And so in 52 weeks, the high has been 73, and in 52 weeks, the low has been 57. So there is very low risk with this company. And look at this, market cap, 305 billion. So this is a large company, and you know you're not gonna get too volatile with the prices. So this is if you want to be really low risk and safe with your money, so to speak, this is a good company that you could invest in for 5, 10, 15, 20 years. Price to earnings ratio is 29. So for every dollar of earnings this company has, an investor is willing to pay $29, and it's giving out dividends. Of course, it should. It's Coca-Cola. Right now, the analysts are saying this is a buy. All right, and it's valued at $66. They're saying so. It's a little high right now, but so you're gonna add this to your watch list. Oh, let's look at quarterly earnings. So as you can see, it's always beating earnings actually. So first quarter, second quarter. So the little lighter shade at the bottom of each dot, that's what they're expected at. And the darker shade is saying that they beat their earnings. So Coca-Cola is constantly beating earnings. Next earnings is April 29th. So we're going to add this to our watch list. Hit the little check. Looks like we already got it. And up here it tells you the ticker symbols. Ticker symbols are just the symbols for the companies. All right, so what I wanted to go over is I did my own little research. I have my own watch list. Remember, you want to create a watch list here. These are my picks. So you see, my picks. These are companies that I'm looking at. GM and Uber, these are car companies. So I was looking at these, and real quick, a lot of people might say, why don't you invest in Tesla? Tesla right now, it's down right now, the price, but what I found out, Uber has self-driving vehicles. If you do a little research into these companies, you find out they already have self-driving Ubers in Austin, Texas. Tesla doesn't even have, they're working on robo-taxis, but they don't have what Uber has right now. And look at the price of Uber. It's at $71. Look at the analyst ratings, 87% buy. And their quarterly earnings, they're getting there. It looks like they just became profitable. Looks like they just became profitable a couple of years ago. First quarter of 2024, they missed earnings. So this is what you call a high risk, but it has a lot of growth potential. P ratio 16, market cap 148 billion. It's at 52 weeks. Its lowest it's been is 54. Its highest it's been is $87. And we're looking at the 5-year. So it's up over 149%. Excuse me. So I've compared this to GM. GM has been around for years. It's established. Look at this. 84% in the last 5 years. And GM also has, I think they're working on self-driving cars. But anyways, you get the idea. So after you create your watch list, right now we only have $200. Let's go ahead and buy our first stock. And after doing all this research, I decided play it safe. I looked up an ETF fund. ETF funds are dividend. This is a Schwab US Dividend Equity ETF. This basically pays out dividends monthly. So this is a safer way. Since we only have $200, I don't even want to go over $100. I want to keep growing my savings account here. So let's go ahead and pick up one share of this. This is at $27. So look at the last year. It's up over 6%. So we can at least pick up one share of this. So we're going to go ahead and click buy. All right, this is giving me default order type may vary based on the trading session. Okay, anyway, so we're going to buy, go back. We're going to buy one share. Now, if you didn't want to buy one share, you just want to buy in dollars. Let's say you want to invest $10. You can invest $10. We're not doing that. We're going to buy one share of this. So you hit up here, dollars, buy in shares. I'm going to get one share. Estimated cost, that's the market price right now. Hit review. All right, we just bought our first share. Now I was looking at Google and complete your investor profile. No, we're not doing that yet. Let's look at Google. So remember, Robinhood gave us this at 0.03. Right now it's down. So I remember Robinhood gave us, it was like $5 and something. Right now it's down. So let's go ahead and pick up another $5 just to get our average cost down. So let's go ahead and hit buy. We're not buying a share because one share. Complete your investor profile. To continue investing in this individual account, help us learn. Oh boy. All right, you know what? We're gonna, next time we'll buy some Google. I'm gonna finish this up. All right, so thank you for watching this video. I hope you learned something, and stay tuned till next video as we get further on into this journey. All right, thanks, bye.
And I'm feeling good.